Welcome to Rolento&JT's Shares Chat Room. Animation is not the art of drawings that move, but the art of movements that are drawn. Norman McLaren. Disney recently delayed the launch of its remake of the movie Mulan and also delayed the next film installations from two of its biggest franchises, Avatar and Star Wars, by at least 1 year as the COVID-19 has disrupted production. While people have been watching movies and TV shows on their Netflix at home for the last half year, if COVID-19 restrictions persist longer, we will start drying up on new content given the disruption in filming and production, where social distancing might be necessary. Weta Digital, Peter Jackson's visual effects company, which is also the company that did the Lord of the Rings visual effect, thinks the post-COVID world of entertainment creation could lead to more matching of computer and live action. Movie production, as with a lot of things in our daily lives now, will also become increasingly virtual. Clearly, audiences deserve and expect a lot more than a superficially assembled virtual movie, unless it is an animation production to begin with, that fails to capture the essence of a live shooting. Technology needs to be employed to serve the story, not the other way around. Nevertheless, the trend of increasing animation and hybrid virtual entertainment content production in a post-COVID-19 world is here to stay. The key would be how advanced and realistic this computer-assisted creative content production could be going forward. One of the marks of the success of a company's products is when these products become daily nouns or verbs in their own right. I'm sure many people who have been working any jobs related to marketing, advertisement, public relations would have heard of conversations like, could you send me the AI file for this poster? Or could you PS my face smaller? Or could you PS this bright spot away? Or can you send me a PDF version of this document? Disclaimer: the shares recommended or not recommended in our videos is purely based on the analysis of its company's business performance. If you make money following our advice, you do not need to pay us. Likewise, if you lose money following our advice, you cannot blame us too. We are not obligated to make sure you earn money. Our approach is more like using global shares analysis to make friends. So if this is fine with you, let's continue. If you haven't known, PSAI, they are both products by Adobe. Adobe is a software company that offers products and services for creating, managing, measuring, optimizing, and engaging with compelling content and experiences. It operates through three segments: digital media, digital experience, and publishing. Its digital media segment provides the largest source of revenue, which grew 23% in fiscal year 2019. This segment contains its flagship product, Creative Cloud, which includes what I mentioned, Photoshop, which is PS, Adobe Illustrator AI, and now it also has Document Cloud, which includes the Adobe PDF Scan and Sign product. The digital experience group is smaller but fast growing. It's up 37% last year. This segment includes cloud services for advertising, marketing, e-commerce, and analytics. It has benefited from the purchase of Omniture 10 years ago, as well as Magento and Marketo 2 years ago. Growth has been flat at publishing segment, which offers products and services such as e-learning solutions, technical document publishing, web application development, and high-end printing, as well as publishing needs of technical and business, and original equipment manufacturers, printing businesses. With the post-COVID digital transformation occurring in businesses and creative industries, Adobe is well placed to ride this growth with its suites of marketing-leading products. Adobe's current share price is about $480. Its current earnings is about $7.94 per share. Therefore, the current PE ratio is 60.5. If you think Adobe can grow faster over the next 5 years, say 30%, which is the average of their 5 years earnings growth rate of 45.88%, and also this is the Yahoo future projections, then earnings in 5 years time would be $29.98 per share. At that point in 5 years, you will be holding shares that gives you 29.48 divided by 480, which is equal to 6.1% return on investment. Anywhere in between 3.7% to 6.1% returns is already higher than bond investments and bank deposit, which are giving you less than 3% and less than 1% respectively. Now, the above are analysis from JT. I personally would also invest in Adobe shares, but it's based mostly on my personal experience in my industry over the past years. If you look at Photoshop, it is an ever-evolving product. The Photoshop from 10 years ago, from 5 years ago, from 2 years ago, it has always changing and always adding new features. And the same can be said for Adobe Illustrator and also Adobe Premiere, which is the video editing software. So before JT tells me about the animation part, I didn't know that Adobe also has an animation software called Adobe Animate. And although it's quite a new software, but from my experience with Photoshop and Adobe Illustrator and Adobe Premiere, I believe that with Adobe's tradition of always improving and evolving its products, I'm sure Adobe Animate will play a very important role capturing market shares in these industries in the future. And of course, another reason I have faith in Adobe is in the past 10 years, my experience in the industry is most of the advertising agencies, marketing companies or PR companies, they all use Photoshop, Adobe Illustrator, Premiere, PDF files. Although there are other alternative softwares now, I think Adobe still captures the majority of the market segments that I mentioned just now because it is a very early player. So unless Adobe as a company, they start to slack off and they don't improve their products, which I highly doubt so, and they don't evolve their products anymore, and they don't create new software products like what I have done with Adobe Animate, the Document Cloud. All these are new software that they have invented based on the market situation and the global demand. I think other competitive software is very hard to compete with Adobe. So what do you guys think about today's analysis sharing? Feel free to leave comments and we can all discuss together.